Talking about the equity markets, a good time to turn our attention to the commodity markets. Manisha Gupta joins us to help us out with just that. Morning, Manisha.
Morning, and thank you for that. Well, I'm talking about the metal prices, where it's a different kind of a day. You have copper, aluminum, zinc, so the non-ferrous metals trading on the higher side, but it is the ferrous metals like steel and iron ore which have gone in for some profit taking, and it would be a second straight day for that to happen. On Friday, we saw steel prices decline by 2%. Iron ore also slipped up by a couple of percentage points. That is after China stepped up regulatory oversight on price moves. There has been a meeting on Friday between China regulator and companies and the future derivative markets as well, telling them to ensure that the prices are not speculated much on the higher side here. Remember, China buys 2/3 of the global seaborne iron ore, so it's important to watch out all the information and news coming out from there. Also, when you look at the month of August, the price rise has been quite immense. I mean, it has been an overperformer that we've seen coming from the ferrous metals. On the Dalian, that is a Chinese exchange, we saw the iron ore prices gain up by 14%, and on Singapore as well, 8% of a surge is what we've seen in iron ore. September has started on a positive note as well, and is the reason China is coming out with that advisory. In the sense of imports as well, for the month of August, it has been a near 14% of a jump on a month-on-month basis. So the steel making has been on the higher side. When you look at the steel production in China, that also gained up by 2%, and that's exactly where the demand seems to be coming in from. I also want to show you on what we've done in sense of prices for this current year. When you look at the month of January, we started the year with $117 a ton. We did see a sharp decline to nearly $98 in the month of May, but not before we did touch a high of $134. So we are trading at where we started the year at this point in time. So for the YTD, the iron ore prices seem to be trading quite flat. The market does tell you that it is more likely that the iron ore prices could be moving towards $100 a ton rather than $135 back in the year. The demand is expected to go down. The numbers also seem to be coming in on the weaker side, and that could put pressure on the iron ore prices going forward.
Okay, all right. Thanks very much, Manisha, for that. That's a quick check on what's happening in the commodity space. Well,